In this video, I'll be talking about variable life insurance. So let's get started. Now, first of all, we're going to be looking at the key features, all right? So key features. So let's get started. Now, the first key feature that we have is death benefit. So, death benefit. Now, the death benefit is the amount paid to your beneficiaries upon your death. With variable life insurance, this benefit has typically two parts. A guaranteed minimum death benefit, which is set at a policy's inception and remains in place as long as premiums are paid. Then we have an adjustable component that can increase based on the performance of the investment options. However, if investments underperform, the death benefit could decrease, but not below the guaranteed minimum. Then we have cash value component. Cash value component. Now, variable life insurance includes a cash value account that grows based on your selected investments. You can allocate your cash value to different investment options such as mutual funds, stocks, bonds, or money market accounts within the insurer's portfolios. The performance of these investments directly affect the growth of your cash value. Unlike fixed cash value policies, for example, whole life, there is no guaranteed growth rate, meaning your cash value could increase significantly or even lose value in down markets. Then we have premium flexibility. Flexibility. So premium payments are often fixed but may allow some flexibility. A portion of the premium goes towards the death benefit and the remainder funds the cash value account. If your cash value grows significantly, it can be used to pay premiums, offering some financial relief. Then lastly, we have policy loans and withdrawals. Policy loans and withdrawals. So policyholders can access the cash value through loans or withdrawals, which can be used for any purpose such as emergencies, education expenses, or supplemental retirement income. However, loans accrue interest and reduce the death benefit if not repaid, and withdrawals may reduce both the cash value and the death benefit. Now that is it for the key features. Now we're gonna go ahead and look at the pros or the advantages. So the first one that we have is investment growth potential. Investment growth potential. Now the policyholder can choose from a variety of investment options, allowing the cash value to grow based on market performance. For individuals comfortable with investment risk, this offers the potential for higher returns compared to other types of permanent life insurance. Then we have lifelong coverage. All right. Now, like other permanent life insurance policies, variable life insurance provides coverage for your entire life as long as premiums are paid. This ensures financial protection for your beneficiaries no matter when you pass away. Then we have tax advantages. Tax advantages. Now, the cash value grows on tax deferred basis, meaning you don't pay taxes on investment earnings as long as they remain within the policy. Then death benefits are generally income tax free for beneficiaries, and loans from the policy are not considered taxable income unless the policy lapses or is surrendered. Lastly, we have premium financing. Premium financing. So if the cash value grows sufficiently, it can be used to cover future premium payments, reducing the financial burden on the policyholders. Now that is it for the pros. Now we're gonna go ahead and look at the disadvantages or the cons. So cons. The first con that we have is investment risk. Investment risk. Now, the cash value is subject to market fluctuations, and poor investment performance can result in a loss of value. Unlike whole life insurance, there is no guaranteed growth of the cash value. Then we have higher costs. So variable life insurance typically has higher fees compared to term life insurance or even other types of permanent policies. These costs include administrative fees, investment management fees, and mortality and expensive risk charges. These fees can reduce your cash value growth and may make the policy less attractive if investments perform poorly. Then we have complexity. So the policy requires careful management and understanding of investment options. Poor decisions or inattention to performance can lead to suboptimal results, including reduced death benefits or even policy lapses if the cash value is insufficient to cover costs. Lastly, we have surrender charges. Surrender charges. So if you decide to surrender the policy or meaning basically terminate it within the first several years, you may face surrender charges which can reduce the amount of cash value you receive. Now, you might be wondering, who is variable life insurance best for? Now, variable life insurance is not for everyone. It's best suited for individuals who have a high risk tolerance, since the cash value is tied to market performance. Those comfortable with investment risks may find this policy appealing. It's also good suited for individuals who are seeking investment growth. If you want your life insurance to double as an investment vehicle, variable life insurance offers the potential for higher returns compared to other permanent policies. It's also good for individuals who need lifelong coverage. Like other permanent life insurance options, this policy provides lifelong coverage, making it ideal for those with long-term financial obligations, such as estate planning or providing for dependents. And lastly, it's also good for those understanding investments. Policyholders who have experience with investments or work with a financial advisor are better equipped to manage the investment component effectively. Now, we're going to look at some important considerations. The first one is cost versus benefit. Now, if you're primarily seeking life insurance coverage, a less expensive term policy may be a better option. Variable life insurance is often more attractive to those interested in combining insurance with investment opportunities. The next consideration that we have is investment management. You'll need to monitor your investments actively or work with a financial advisor to ensure the cash value grows as expected. Without proper management, your policy may underperform. Then we have financial goals. If your primary goal is to build wealth through investments, a separate investment account like an IRA or brokerage account may provide greater flexibility and lower fees compared to variable life insurance. Lastly, we have policy maintenance. Now, variable life insurance requires regular review to ensure the cash value is sufficient to cover the policy's cost, especially during market downturns. Now, let's look at the verdict or basically the final thoughts. Now, variable life insurance is a versatile but complex financial product. It can provide lifelong protection for your loved ones while allowing you to grow your cash value through investments. However, its success depends on how well you manage the policy, the performance of your chosen investments, and your ability to handle the associated costs and risks. Now, if you're considering a variable life insurance policy, obviously consult with a financial advisor to ensure it aligns with your overall financial goals and risk tolerance. Now, obviously, you can also go ahead and search Google on people's experience with variable life insurance to get a more in-depth view on how it works. So that'll be basically it for the video, and I hope that you learned something new and you can finally make a decision. And I'll be seeing you guys next time. Peace out.